think the days of growth at all costs are long over. Investors are looking for companies that could actually have a sustainable business, profitable business that generates cash in the mid to long term. I think that's been one of the big changes, is that mindset of not just to find growth at all costs, but also having a lot of structure around how funds are being used to create profitable business. I think that's been a big change.
Well, welcome to this special edition of the Decarb Connect podcast. This is the first in a mini-series dedicated to the challenges, opportunities, movement around how we scale up, not just do seed or Series A investment, but really scale, really commercialize the hardware tech that really is going to characterize how and if we decarbonize our most essential, but also most CO2 intensive sectors. So an interesting little mini series, and I'm very pleased to have with me today Eduardo Gomez, who heads up CRH Ventures, has been there for a couple of years, and we'll learn more about his background. And also, shameless plug, is a speaker at our Techinvest event in September. But the key reason I wanted to start with Eduardo is because of this really kind of interesting position that he occupies, both representing cement, one of these key industries, but also, the corporate venture, that real essential element within the capital stack. So Eduardo, you're very welcome. Thank you so much for agreeing to talk with us.
Absolutely, Alex. Thank you very much for having me. It's a pleasure to be here and look forward to the conversation today. So thank you very much for having me.
Well, let's kick off. Nice, easy question to start with, just to lure you into a false sense of security. Can you tell me and the listeners a little bit about how you've arrived at this point in time, this role and this work that you're doing? What sparked it all?
Yeah, absolutely. So I joined CRH around 2.5 years ago to launch CRH Ventures, which is now our corporate venturing arm, and I'll share more about that here shortly. But before joining CRH, I spent my previous 7 years working also in the building materials industry. Through different functions, I worked on corporate strategy, strategic planning, and M&A, and that's what led me to join CRH. With the challenge of developing and launching the CVC, which is now CRH Ventures, and we're looking to partner and invest in best-in-class companies that are going to help us to develop, the solutions that we're looking for in the future, address our customers' challenges, and one of them clearly being how do we decarbonize our operations and how do we create a more sustainable future.
That's interesting. I actually hadn't realized that you were the launcher of this whole unit. That must have been really fascinating work to really build something like that into such an established and global business. But just for a bit of context, when you look across the portfolio that you're building, sort of roughly what kind of percentage of your time or of the focus would you say goes on emissions and decarbonisation versus all the other much needed R&D and innovation that you're looking at?
Yeah, so we've built our portfolio, and we've established our investment approach through 4 focus areas. One is decarbonization, the other one is water, circularity, and then productivity. So those are very broad areas that are were established by definition to be broad and ambitious. And so when we look at opportunities, they fit in one of those 4 buckets. And then the idea really is to find companies and find founders that we can really partner long term. So we're clearly looking to generate strategic and financial value on our investments, but we're also looking to have that long term relationship on how can we deploy and scale these technologies to create impact. At the end, we are, as you very well said, we're a corporate venturing group. So we're here to also support our parent company, CRH, strategic objectives and do that at scale. We're here to pursue that scale, and that's really the ambition on what we were building here.
Well, let's take the option number 1 there, which is decarbonisation that we're focused on for today. Tell me a little bit about what is CRH's lens on investing in technologies around decarb at the moment? Are there particular types of leadership team or types of opportunities or types of technologies, or I don't know, how do you decide in like the hundreds, if not thousands, of hardware tech startups. How do you decide where to focus? And in general, what's the view from the top like for you this year in 2024?
Yeah. So when we think about decarbonization, the first thing that we think through is how scalable is this technology, right? The challenge with a lot of the decarbonization technologies are that they are asset heavy. They require a lot of capital to scale, and they also need to then get into a point where the unit economics make sense and they can actually have a long-term profitable business to be managed independently. So that's really, it's a challenge by all means and something that we look into very carefully. So we look at a couple of things. One is certainly where the technology is from a readiness level, where they are now, if they have a clear roadmap as to how they can scale. Certainly, the team and the experience is a huge factor here. Whether they have experience in scaling previous technologies, whether they have also visibility and line of sight as to what is the commercial approach to take that technology into market. But also, it's very important that we think through what is the right funding requirements, what are the right funding requirements to get to that scale, and probably we're going to go into that point here. But it is really a challenge into thinking what's the right type of funding mechanism to get to that point of scale. What is it going to take? So we really want to understand all of those things before we make any decision. And then we also bring to the table our footprint, our capacity, our scale, which is significant. CRH is the largest building materials in the world. We have a significant business, fast growing business across the US, North America, and Europe. So we bring all those capabilities as well. And I think this is a significant value add for the companies that are looking to scale. We like operating in asset heavy businesses. That's our core expertise. So we're not afraid of that. And I think that's one of the shifts that we've seen recently in venture capital. People getting more comfortable with the idea of investing in companies that would require assets to change the way our world is built.
Yeah, no, it's a significant shift in how non-industrial brains think about any kind of allocation of capital, isn't it? Is very clearly very at a very simplistic level, very different from investing in SaaS or something like that. But even in comparison to, I don't know, previous investors who might have looked at solar or other forms of renewable, again, very, very different. Okay, let me ask you a question then, back on the technology. Are there particular types of decarbonisation and sustainability hardware tech that are really at the top of your tree, or are you kind of pretty open-minded? How do you decide what to focus on?
No, so they're pretty well aligned to the four areas that I mentioned before. So when we think about decarbonization, cement is one of the businesses that we have exposure to, and a business that we've been investing as a company over the years. So we are interested in understanding what are the technologies that could develop new binders or can develop new low CO2 materials. So that's one area that we've explored, that we've already started to make investments in, that we're partnering with companies that are taking that challenge on. So when you think about decarbonization, we look at low CO2 materials. That's one area that we've been focusing on within a pretty broad range of other opportunities. Then also within water, when you think about sustainability angle, when we think about non-revenue water, it's all that water that it's being lost, treated water that is being lost due to leakages in the system, which is a huge opportunity. It creates a huge cost and an issue for the different entities, governments. So we're looking to address that challenge. And as we know, water is becoming a scarce resource more and more. And so it's a good opportunity. It makes a lot of sense, but also it's the right thing to do. So within sustainability, water is our core focus area. And then also we're looking at other more novel technologies around carbon capture on the sustainability angle. How do we integrate those technologies to our current operation processes and manufacturing processes? So it's a wide range, but we're really thinking about how can we take those technologies to market and how can we be a good partner to scale those technologies. And as all those areas that I've mentioned before, those are areas that are also core to our businesses today.
And how many, I mean, we talked before we hit record actually about carbon upcycling, but how many investments and partnerships have you formed specifically around that decarbonisation and sustainability?
Yeah, so we've made 4 investments. We've announced 4 investments already. We have a strong pipeline, and we're going to be announcing a few more here shortly that are well progressed. But as you said, carbon upcycling is a great example of a company that is taking that challenge on, converting industrial byproducts into supplementary cementitious materials and reducing the CO2 footprint. It also has an angle. In this case, carbon upcycling also has an angle around circularity because they're using waste material as a feedstock. So it provides the full circle on reusing existing materials to create a value add in the cement process and the concrete process.
Okay, so this is all really good context. Now we have a good feel for the kind of focus that you bring, types of investments you've made. So let's turn our attention then to your sense of how the market and kind of investment market specifically is changing. So you've been, I don't know how long it took to literally get the venture unit up and running, but you've been in this role 2.5 years. What do you think of when you think back to, I don't know, late 2021, early 2022 versus, mid 2024? What are some of the good changes, good developments, or perhaps question marks, challenges that have really emerged during that time period?
Yeah, so the market has changed significantly since 2020, 2021 in terms of capital available, and there's been a change, let's say, from the way capital was being deployed in 2020, 2021, impacting valuations, impacting the speed at which capital was being deployed through venture capital. There's also been some change, and it's going to be progressive around the appetite for traditional venture capital investors to think about hard tech and think about asset heavy businesses and startups and being more comfortable with the idea that to change the built world, you have to invest in physical assets. You're not going to be able to transform the built world just investing in software because you need to change, physical assets. So it will require a bit of that mind shift. So that's we're seeing that, and we're very excited about that. We're seeing, investors being more aligned with the ambition of these companies, and also being more comfortable with the requirements that take to scale these technologies. The amount of funding that it takes to go from a lab plant to or a lab demo to a pilot plant to a commercial plant to then to a full scale plant. Like all those are significant hurdles that companies have to overcome, and they require a lot of capital to get to that point of reaching scale and obviously having more favorable unit economics. So that's been a shift. Still a long ways to go, but that's one area where we feel very comfortable investing, and we have a lot of the alignment with our businesses to provide that support in taking that step forward with the startups that we partner with.
It has been, I mean, in that time, on just thinking at a more macro level, changes like Ukraine, like interest rates, all of these other big macro factors. Clearly, when you read the FT or you read the Wall Street Journal or anything, in terms of general appetite for investing in early stage tech or certainly Series B plus tech, there's been a lot of anxiety around that, hasn't there? Has that been equally true of this kind of industrial hard tech space, or is there any level on which, because it was still quite a nascent part of the market, has it been somewhat, I don't know if protected is the right word, but has it been as affected as perhaps some of the more mature technology markets? What's your sense of that?
I think it has not been as affected in terms of capital deployment. We're still seeing kind of this space, climate tech, hard tech growing, and funding becoming available. But certainly the hurdles are getting higher, and the challenges are still there when it comes to having clear line of sight as to how you're going to be using those resources as a founder, and how you're going to be using the funds that you're getting to create a viable business. I think the days of growth at all costs are long over. Investors are looking for companies that can actually have a sustainable business, profitable business that generates cash in the mid to long term. I think that's been one of the big changes, is that mindset of not just to find growth at all costs, but also having a lot of structure around how funds are being used to create a profitable business. I think that's been a big change. So to your specific question, I think climate still remains an area of big opportunities. The starting point was much smaller than other areas. When you think about financial tech, fintech, or retail or healthcare, those are huge spaces within venture capital and have received a lot of the funding over the past years. So they've been much more impacted in terms of funding available than climate tech. So that's where we see the opportunity, and I think this is going to continue to grow over the coming years.
I just want to take this opportunity to thank our production partner and sponsor, Jano Media, for their support in delivering the Decarb Connect podcast. Over the last few years, they've helped us to facilitate great conversations that connect us with our audience, and their skills and expertise mean that we get to concentrate exclusively on generating the content, the conversations that engage, inform, and inspire. So just looking at where you stand in the capital stack, obviously you occupy as a CVC quite a specific point, don't you? It's sort of early capital, but it's also, the opportunity to use sites and to use actual live plants to test and build. But equally, you're probably not going to be the stage of the capital stack that's sort of thumping in 150 million to kind of take something to folk or beyond that. So what's your sense of, let me rephrase that. Do you see those bigger capital providers, bigger investment checkbooks, old school language, but do you see those people entering this space? And are you, not just do you see it, but are you satisfied that there's enough momentum around that? What's your sense of that?
I think so. I think there is momentum around it, and I think we're seeing that just by looking at the trajectory of funding becoming available for these companies. When you think about construction technology or climate technology, those numbers are going through a good, let's say, growth trajectory. But also from our perspective, we're less so kind of putting a limit on where we invest, meaning we're more focused on finding the right opportunity with the right company, and if it's a series A or B, that's where we have flexibility to find the right partnership model. What we're more focused is how can we create impact at scale. So oftentimes to do that, you have to partner with companies that are a bit more mature in their technology, where you can actually take those technologies across our operations, across our businesses, and really support that growth journey. So that's really what we look at. And so we might, as a CVC, we might be positioned a bit later in stages. And we have the ability, given the strength of our parent company CRH, to make larger investments as we go along. And that's one area that we're exploring, is how can we partner with companies that are later stage, but also where they could benefit significantly from our scale and our deployment capabilities. So that's where we have flexibility, and I think it's a unique approach that we're developing here at CRH Ventures.
Yeah, and that sort of lends itself to the next question I wanted to ask, which is, you hear a lot, I hear a lot, certainly when I talk to industrials as well as the early stage tech, about, oh, we're being asked to de-risk if it's a tech company, or we need to de-risk if it's an industrial or an investor. Obviously, part of the de-risking of some of these deals is exactly what you're talking about, which is, you have this global asset base, you have experience as well as money. But what else do you think is either starting to take shape, or still needs to take shape, that can further de-risk, if that's even really the best phrase for it, so that other, again, bigger capital providers can come in as co-investors? What else would you need to see, do you think?
Well, I think one of the biggest factors when you think about de-risking technology is really understanding how the potential consumer is perceiving it, and what's the size of the market, and what's the consumer's reaction to the technology. Oftentimes, there's a lot of focus in the technology, kind of on the back end, on the process, on the hardware. But we also like to take into account where's the market today, where can the market get to, and what's the customer's pain point that we're solving for this technology, and what's their willingness to really pay. Because at the end of the day, that's how you create a long-term sustainable business, is by really understanding who your customer is and how you're solving their challenges, how you're partnering with the customer also to address their pain points. And that's where our perspective as the largest building materials company in the world comes into very valuable, so that we can provide that perspective. We can work and understand how can we take this to market. So there are two ways that we think about de-risking. One, on the technology side, on how do you scale and how do you go from maybe a couple tons a day to a megaton plant, versus also How do you think about the customer? Where are they today? What is the future customer's position? What are the markets that are better suited? So those two play a significant role, and that's where I think the value of a CVC comes very, very handy for startups and founders. So that's what we like to think about in our process.
So a different question, I suppose. You're again investing in these early, well, I keep calling them early stage. I mean, I guess that's in the eye of the beholder, isn't it? As to,
Yeah,
you're not investing really in the kind of lab bench, early
no,
stuff.
you're right. Yep.
Not the right phrase for me to use, sorry. But
Yeah.
um how do you make sure that you are staying ahead of the curve? I mean, there's so much pressure to show that this particular niche part of the climate tech market really can deliver returns at each stage of the investment cycle. I mean, what's your superpower there? What's your secret sauce to trying to do that?
I think that really when we think about staying ahead of the curve is understanding that there is a place for both internal innovation and internal development within CRH, but also we need to be aware there's a lot happening outside of our walls that we need to find right ways to partner. So to get ahead of the curve and stay ahead of the curve, you need to embrace those new technologies and those founders that are developing, the technologies of the future and really become a valuable partner for them. So that's how we stay ahead is by really understanding and mapping out what's out there, understanding where the technologies are heading, and not being afraid of taking certain risks, measure risks. How do we partner? How do we scale? And that's the whole idea, the whole concept behind CRH Ventures is being more comfortable with that risk-taking approach and partnering with these companies. So I think that's really the way. There is no secret sauce here. It's really just embracing the challenges, understanding and being a good partner. I think there are many investors out there, so we need to position ourselves as a good partner to differentiate and to become, the CVC of choice in these areas. So that's what we're working towards.
Is it important to you when you're placing an investment that others are also investing at the same time, or do you ever act as a sole investor at some particular stage? What's your preference?
Our preference is we like to have different types of investors joining around. I think it's healthy. I think it provides everyone brings different capabilities and different strengths. So we like to join rounds or potentially lead rounds where we have a good balance of corporate investors, financial investors. We think that's healthy. It creates a good dynamic. So that's what we like. So that's really kind of what we prioritize, and we have also the flexibility of joining syndicates as we've done with our investors, the companies that we've invested already, but also we have the ability to lead rounds, and that's something that we're also starting to do more and more into the future. So having that flexibility of joining syndicates or leading rounds gives us a much better position. But in general, to your question, we'd like to have a balance, and we think there's a lot of value that everyone can contribute.
I mean, I don't know if this is an easy question to answer, but is your gut feel that you will stay with the investments you've made through each round, or, are you looking for exits? What's your thinking around that?
I think obviously we're investing here, and we have a clear focus on delivering strategic and financial value,
Mm.
and that's going to be assessed on a case by case basis. So it's very difficult to generalize, the approach, but I think it's more, how what's the best way to create value, and that's the path that we would take.
Okay. So you've already mentioned that as a dominant CVC in the space, in the building and construction space, you're offering money, obviously offering access to sites and support of that type. What else do you think it is that you're bringing to the support of these investments, to the support of these startups that perhaps other CVCs just aren't at the moment, or other earlier stage investors can't?
Yeah. I think that the biggest value add that we bring really is the knowledge of our teams, and I think that's really the big differentiator. We have best in class technical teams, commercial teams across the world, and we have the alignment internally to work together and provide that support to the companies that we partner with. We like to do all that work in advance, so there's a clear line of sight as to how we're going to partner and how we're going to work with the company that we invest in. So we know, for instance, just taking carbon upcycling as an example, when we invested in carbon upcycling, we had also agreed on developing the first commercial scale plant at our cement plant in Mississauga. We had a team dedicated to that. We had not only our investment committee support, but also we had alignment with our senior teams across the businesses to be part of that. And then we really spend a lot of time doing that work in advance, but also after the investment. So that's where we that's really what I think differentiates us, is just having that conviction and the commitment from the teams across CRH to support the company moving forward.
Okay, let me ask you a question then about the kind of the next level scale. I feel like the last 15 months, this phrase "folk first of a kind," that's like not something I'd heard probably before last summer, if I'm honest, has been really coming up more and more. And I wonder what's your insight into that? Is it helpful for everyone to be so focused on folk as a nice concept? Does it, I don't know, what do you make of it?
We like it, and that's what we're doing. I've mentioned carbon upcycling, first of a kind, large scale plant in our cement plant in Mississauga. We're also working with a company, FBR, to build, to bring their technology into the U.S. So it's a first of a kind technology in a new market for them, where we have a very strong presence. So we've announced that we're working to bring their first robotic block laying machine into the U.S., and that's going to be done in the next few months. So we like the idea of building and working to develop first of a kind. But at the end of the day, also comes back to what I was saying before: how can, through these partnerships, can we develop and deliver the solutions that our customers need? That's what we're focused on. If it's a first of a kind, great. But at the end of the day, what we're trying is, how do we understand our customers' challenges and how do we solve and address them? And I think that's where a lot of the value can be created. So that's the approach. And we have a few more that we haven't announced, but certainly could be considered as first of a kind.
Oh, I'm looking forward to hearing about the new projects you have, because if they're anything like, so I'm sure they're not all like carbon upcycling in terms of the tech, but in terms of the brand and the power that's been created in the last few years, there's some really fascinating opportunities, I'm sure. So, okay, close out question for you then. So I mentioned at the start that you're going to be speaking at our Techinvest event in September in Boston. The whole purpose of that event is to really try and work out, how do we get more capital in, more of the right technologies moving up through these kind of ever bigger stages of investment rounds. When you think about that, what is it like? What would your call to action be, or what is the thing that you would most like to push that group, in September, to either discuss or achieve together? What would be important for you about that meeting?
I think it'd be great to spend time really just having discussions that around the type of resources that are available for companies to scale technologies in the decarbonization space, in the climate tech space, in the construction tech space. There is a lot of funding now, specifically around decarbonization. There is a lot of funding. When you think about government grants in Canada and the US, those are becoming quite prominent, and a lot of the companies are pursuing them, rightfully so. But I also think that that's not kind of sustained capital, and that shouldn't be the end purpose. That's one type of resource that allows you to take a big step forward. But at the end of the day, you have to have clear path into how do you create a sustainable, profitable business. And so the way I think about these grants and government funding is, it provides the right resources to take that first step, but then afterwards is, how do you go from there and you create a sustained business. And I think spending some time discussing what options are out there, what are the different approaches that founders are taking to get ready for that big step. I think that's quite interesting, and that's the biggest challenge. We've seen a lot of companies that don't make the jump from kind of lab scale or even pilot scale to commercial scale. So what else can be done to make sure that more companies are taking that step forward and reaching commercial scale, and then moving into long-term profitability? I think that's probably an area that I'd be keen on learning more about, talking with other investors, and also hearing founders' perspectives.
Yeah, I think I think that would be a really interesting part of that gathering. And yeah, it's always interesting to me to sort of understand and I really am someone that tends to learn and understand by sort of seeing how people are reacting together, not just what they're saying. But I am interested to sort of see more about how the leadership teams of these tech companies, like really how much that's driving. I mean, clearly it's driving their success, but I'm sort of fascinated to see how that plays out on site. What we learn about the right kind of leadership teams and what they're able to achieve. So between you, the rest of the capital stack, the really interesting tech companies that we have coming on site, I'm excited about it. But thank you so much for talking us through your approach. Congratulations on launching, a really exciting powerhouse within the CVC and venture space. I mean, that's just incredible what you've achieved in just over 2 years. So congratulations, and thank you again for joining us.
No, thank you, Alex. Thanks for having me, and look forward to our conversation in September.
At Jano Media, we recognise that great content has the power to create impactful and positive change for lives and society. Whether that's video, live streams, photography or podcasts, partnering with us will enable you to harness the power of content to engage, inform and inspire. Reach out to us today.